Hi and welcome. You're listening to the X22 Report. My name is Dave and this is episode 1631 and today's date is August 6th, 2018, and the title of the episode is The Fed is Now Cornered by This One Move. Trust the Plan. Let's get into the economic collapse financial news. So we know that the central bankers, they do not want the Brexit plan to move forward. They'll do whatever it takes to stop it, and this is what they've been doing. We've been seeing a lot of individuals resign their position because the Brexit is not going the way the people would like it to go. Remember, the people voted to vote Britain away from the EU, and they want to break free from it, but the EU is trying to keep them in some way or another within the EU system. And we can see from the plan that was drawn up by Theresa May, it looks like this is what is happening. And her minister, well, this individual is ratcheting up warnings that the Brexit talks might end in failure. The British government has increased the pressure on the EU in recent weeks, urging the bloc to loosen its red lines and come to an accommodation over Brexit. Part of the UK strategy involves giving greater visibility for no-deal planning. There's now a 60% likelihood of a no-deal outcome as the clock ticks down to Britain's scheduled departure in March. And once again, the EU is going to make this very, very difficult. And many of the individuals that read this white paper, they're saying, no way, this is not what the people wanted. And of course, we know what the central bankers always want. They want control. And they're never going to just give up control. They'll just never, ever do it. They will fight back until the very, very end because that's what their whole business is about. That's what their whole agenda is about. It's about controlling each and every country, controlling the world. This is why they loan money to governments. This is why they put them into debt, to control them. I mean, think about it. You don't need a massive military. You don't need an entire army. You don't need any of that. All you need to do is create fake money, currency I should really say, and loan it to the governments. And then they're indebted to you. And then you can control them because they have to listen to what you say. Or guess what? You collect on that debt. And if you don't have the funds, guess what? They come after your real assets. And this is the easiest way to control a nation. And a central bank will never give up that control. Now, we see the global economic system breaking down, and we're seeing a lot of retail stores, they're declaring bankruptcy. Here in the U.S., we've seen Toys R Us, Bon-Ton, and many, many others declare bankruptcy. Well, there's another retailer. This is Mattress firm. This is the U.S. mattress retailing giant, and it looks like they're having a huge amount of problems. The Mattress firm, which is the largest U.S. mattress retailer, is planning to file for bankruptcy. The firm is struggling to exit costly store leases and shut some 3,000 locations that are losing money. Now, of course, they brought into the story that Amazon is the cause of this. Everyone's buying their mattresses from the Amazon. And again, Mattress firm has an online presence, and it's very difficult to buy a mattress online. You go to the store, you lay on it, you want to feel what it feels like, and then you make a decision. And a lot of these stores, they have the same day delivery, and it doesn't cost anything. It's free delivery, and it makes no sense why online would be winning out. They're using this to convince you this is why all these stores are closing. Think about it. In the beginning, what they did was they told you it was the weather. The weather was the problem, storms, this is why retail was declining. And if you listen to the reports 2-3 years ago, this is what they used. And then what happened was retail continually declined during the sunny days, during the summer, during the times when there was no bad weather whatsoever, even throughout the winter. And they lost the narrative. So they had to make something else up. So they went to online. And this was perfect because everyone knew Amazon and it was easy to do. But again, there's other stores out there, food stores, other fast food restaurants. This is not all going to online. And Amazon is only a very small portion of online sales compared to the retail industry itself. But they're using this to convince you this is why all this is happening. No, why this is why all of this is happening is because the everyday person, well, they either don't have a job, they either have a part-time job, they don't have savings, and they can hardly or barely make ends meet. And this is the real problem because we've been watching this decline for a very long time. And we're at the point where everything is falling apart. Now, we understand that a lot of calculations are being changed. And we're not talking about the little changes. We're talking in-your-face changes like GDP. And there's a reason for this. Now, of course, Trump, the government, they're all out there saying that the economy is doing well. The Fed is out there saying the economy is doing well. And we need to understand why this is all happening. Because we know the economy is not doing well. And we know, and we've been talking about this, that both sides want to control the narrative. Now, Trump came out and he outed the Fed and said, listen, you're raising rates too fast, but you know what? You do what you feel is right. That was the beginning phase of this. He laid the groundwork. So now the Fed, well, they decided not to raise rates. Remember, they both want to gain the narrative. So what happened? We are seeing the economic data. It is all being revised in a huge way, a way that we've never seen before. So what do we see? We see the U.S. economic history. It was rewritten in a shocking, unbelievable way, where all of a sudden people are out there, wow, we hit 4% GDP. Well, other things were revised or manipulated in a huge way. The annual savings rate was revised higher by 1.6% on average since 2010, with the 2017 U.S. savings rate doubling overnight from 3.4% to 6.7%. Now, if we put these revisions into context, the last comprehensive revision conducted in July 2015 only produced an upward reversion of 0.3% per year. In fact, the revision to the savings rate over the prior 6 months is the largest on record, according to real-time data available from the St. Louis Fed since 1997. Now, we know that none of these statistical revisions actually mean anything because both before and after the BEA revision, some 50% of Americans still don't have a single dollar in savings, and the only ones affected are those in the top percentiles of U.S. society, which means that, you guessed it, the rich get richer again. And yet, the statistical level, which is the only one that matters for the Fed, the latest numbers suggest households have been thrifty with their money during the recovery. And with one flick of an Excel switch, the secular decline in the U.S. personal savings rate was halted. What does this mean for GDP? Well, simple. It is revised sharply higher. Remember, they revised it, they added $1 trillion, and now they adjusted the savings rate. They're going to adjust the spending, because remember, 70% of GDP is the spending of Americans. So they're going to adjust this to make it look like the economy is growing. So now we can expect the unemployment rate now also to decline to 3.5% by the end of 2018, and most likely hit 3% by 2020, because they changed all the calculations. So the real question is, why is all this being done? Why is this being done right now? Is it to really make the economy look good and to make everyone think that the economy is doing well? When people are out there and stores are closing left and right, the housing market's falling apart, people are trying to sell their houses, the prices are coming down, they can't understand why traffic is drying up. People have 2, 3, 4 part-time jobs because we know that the multiple jobs, that is increasing. The full-time high-paying jobs are decreasing. So what would be the whole purpose of this? What would be the plan? Well, remember, we need to go back to what we've been saying all along. Both sides are trying to gain the narrative. The central banking community, Trump and the Patriots. To put pressure on the Fed, what do you have to do? What do you want the Fed to do where they have no excuse to bring the system down? Something that you know will bring down the system. Now, they've calculated this already. They know if we hit around 3% interest rates, they know the system's going to come down. Now, they went back in time and all the way back to 1929, and they calculated the interest rates of when the economy came down. And each time it was a little different depending on the economy. At this point, we're at the lowest point we've ever seen. And since we're at the lowest point we've ever seen, it's going to come up to 3%. But in other times, we've seen it in the 70s, where interest rates were at 5%, 74, where we saw interest rates at 10%, 82, where we saw interest rates around 18%, and then 87, we saw interest rates around 10, and then, in 2007, interest rates were close to 6. Well, we need to get the 3%. That's the target. So to make the Fed do what you want it to do to crash the economy and give it no excuses, what do? Well, it's very simple. You change the calculations. You tell the Fed the GDP is 4%. You tell the Fed we're at 3.5% or 3% unemployment. You tell the Fed that people have a lot more money than that's been reported. So they're ready to spend. To force the Fed to raise the rates. What are they going to say? We're waiting for the savings rate to get better? It already is. We're waiting for GDP to get better? It already is. We're waiting for the unemployment to hit 3.5%? It will be there because they just manipulated it all. We're waiting for what? What are they waiting for? Inflation? They'll just change the calculation. They're cornering the Fed right now so they make the move and raise interest rates faster. Then they will turn around as the Fed raises interest rates because remember, the economy is great. Everything's going smoothly. What's changing? The Fed is changing the interest rates. The Fed is raising the interest rates in a strong economy and and unwinding at the same time. Don't forget that. And the economy is falling apart. Hey, we saw this back in 2008. Prior to that, what was the Fed doing? Raising interest rates. When they raised the interest rates, what happened? All those people with adjustable rate mortgages in California, they couldn't lock in. They couldn't afford the homes. They walked out. All the speculators, they dumped real estate. What do you think is going to happen this time? All those individuals that have adjustable rate mortgages, all those individuals that have or are looking to purchase a home are completely knocked out of the real estate market. Those people that were going to sell their homes as prices come down and rates move up, they're going to take them off the market. And people, well, in reality, they don't have savings. They're not going to go out and spend. As we can see in the retail market, things are completely falling apart. But the Fed has to raise rates because all the statistical information is exactly what they wanted. The Fed is cornered right now. This is all being done on purpose to push the system to the edge. This is the plan. And it's unfolding right in front of our eyes. We can see it happening. And the purpose of this, making look, and I know a lot of people out there saying, wow, Trump came into power, the economy's great, everything is great. Yes, this is what people are seeing on the surface. But what's really happening behind the scenes is that the Fed is going to be blamed for bringing down this incredible economy. Even though it's fake, we all know it's fake, it's an illusion. But no one's going to come out, the mainstream media is not going to come out and say this was a fake illusionary economy. Because it was all based on Obama. It was all based on the Fed. And with the Fed telling you that the economy's strong, they're not going to come out and all of a sudden say the economy was an illusion. They might say the economy is not doing well and they're going to try to push that angle, but it's going to be too late. And we already see the mainstream media, they're already starting to push that angle that real estate's not doing well. Well, we know it's not doing well, but the everyday American doesn't really know this, and they're trying to blame this on Trump. But what Trump is doing and the Patriots, they're trying to boost this economy to a place that we've never seen it before, to force the Fed to raise the rates, to have the system come down, turn around and say the only thing that changed is you raising the rates. We received this information that the economy's strong. You even said it in your notes, your minutes. The economy's strong, and you said it was great time to raise rates because you know what you're doing, and the economy failed. Why? He's going to corner the Fed and most likely go after an audit and then take control of the Fed, like we discussed in previous reports. And when the economy comes down, for those who've been preparing, it's going to be a lot softer landing. For those who are completely in the dark, it's going to be a little bit more difficult. Not as difficult if the central bank had their way and controlled the narrative, but we see what's happening here. If Trump and the Patriots control the narrative, the transition is not going to be as hard as the central bank transition, because they don't care if people get wiped out. They don't care if people die. They don't care about any of that stuff. And we see right now that we are going to be going through this transition, and people have to be ready and prepared, because we're going to go through a period of time where a lot's going to freeze up, because when you're going from one system to another, it just doesn't happen with a snap of a finger and everything just goes smoothly. I mean, we were coming off the gold standard in 1970, going on to the petrodollar system. People couldn't get fuel, jobs, people were being laid off. There weren't many jobs in the 70s. They were difficult times. And that was the reserve currency coming off gold with hardly any debt. Now we're on the opposite end. We're coming off a system where it's at its end stage, where we have too much debt. The dollar's not backed by anyone, and countries are going to lose faith in it. This is a bigger problem than we had in the 70s. It's going to be a lot harder, and we need to move to something completely different. And this is why you need to be ready and prepared. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.